Okay, today is August 16th, and it is a pretty pivotal day in the market. Yesterday we had quite a bit of selling, and if you look here at these last couple of days, this is today. Yesterday there was a big gap down, and the day before there was a little bit of selling. Yesterday we got our sell signal when this closed below. Actually, I think it was here. Yeah, we had a close below this red line, which is the New York Stock Exchange moving average. And once you get a close there, that gives us this blue area, which is a sell signal. And then we're looking for confirmation when the power index gets below the zero line. And that's our own index that we use to do confirmations of what the primary price move is. So in the New York Stock Exchange primary price move, we had a primary indicator followed by a confirmation indicator. And today we have this little moving average crossing over the big thick red line. That's a third indicator, which basically it's pretty rare that all three of these indicators hit at the same time, basically telling us that we are now in a bear market. This is the time to short. This is not the time to try to stay long and make money on your long positions. It's time to tighten up those stops and get out if you haven't done it already. Let's take a look back at what has happened here over the past several months. You can see how we chart the green times, which is the time to be buying, and then followed by the times to be short and long. You can be hedging in this particular time, and notice how it's a pretty flat area. It's really great for traders to be in this area. And then when you get into the red area, it's no time to be long, and when you're in the green area, it's no time to be short. So right now we just moved into the red area. This is an inflection point. We're going to see how long, when we get to that center line there, how long and how strong the selling is. Today it's not that bad. You can see it's a very small move, and it's trying to stay above that middle line. But nonetheless, we are in the red zone, and so it's time to lighten up those positions. Cash is not a bad position to be in if you don't want to be shorting, but you shouldn't be long if you can help it. Tighten up those stops, folks, and know that we're getting ready to batten down the hatches. This is essentially the sell in May and go away that we never really had in May. If you look back in May, we were booming. Things were really moving up, and they continued to move up, and they continued to trade fairly sideways, but mostly in an upward fashion, and leaders continue to make new highs, but now they're not, and everybody's afraid of what's going to happen in September with the Fed pairing and tapering and removing liquidity from the market. And even though they're going to do it slowly, the fear of that happening is going to really wreak some havoc in the market. So take a look at what happens here. It's a pretty small move. It could get us a little dead cat bounce in here on Monday, and we might even have an up week on Monday bouncing into this level. But I suspect that the odds are in our favor if we're on the short side. Happy trading.